It's a very exciting time right now in Edmonton for the investment market. What we're seeing right now in Edmonton on the investment side is a shift in the types of transactions that have been happening, even from last year to this year. When you're looking at transaction volume, for example, transaction volume has actually decreased year over year to where we are today, almost by the tune of 80% of what we were at last year. But that being said, the dollar volume of transactions that are happening in our market has remained relatively stable. So when you look at why that is in our market, typically the transactions that have been occurring in our market today have been of a higher dollar nature. And so even though there's less transactions occurring in our market, the amount of dollar volume that has traded in our market has remained relatively stable. We're hovering around that $1 billion mark. With moving into the future, we're looking at, by the end of the year, around that 2.7 billion, which is on par with what happened last year. And really two factors go into why there's less transactions, but the dollar volume is the same. Number one, investors are really looking to balance their portfolio. So where some investors were maybe bullish on a certain asset class and their portfolio wasn't as diversified, they're looking to shed some of those assets into becoming more of a diversified portfolio. Number two, with investors, you're looking at groups getting rid of non-core assets and pursuing assets that they're maybe better managing or better off managing in the past. Investor sentiment in our market has always been towards seeking retail assets, which has become a very competitive asset class in Edmonton, in Alberta. Alberta is fortunate enough to see a level of high gross earners relative to other provinces, which more transposes into more disposable income, better tenants being able to generate revenues, investors being more confident in those tenants and more so confident in the asset class.